ever, we are now going to hear from the auditors. David?
Good evening, everyone. I'm glad is here today. This is our annual time that the board, serving as the whole audit committee, here's the results of our audit. Gladry has been out since June, working with Andy, and going to let you know the results.
So I guess it's a little more entertaining, but
okay. Can everybody hear me okay?
yes.
Okay, thanks. Thanks for the introduction, Dave. My name is Tara Leah. I'm with Gladry. I'm a senior manager with the firm. As Dave mentioned, we've been working on the audit, and tonight we're here to present some of the results of the audit as we're required to communicate with you. I also have with me Matt Shipley. He's the audit manager on the account. He and I have worked on the audit for the last couple of years, and we'll talk a little bit more about some of the engagement team members that are involved in the audit, but we've had some nice continuity of people involved in the audit process, which has been very helpful, I think, on both sides. So I'm going to walk through our slide deck here, and hopefully this will work. There we go. So, like I said, the two of us presenting here today, myself and Matt, additional team members are listed here, and really these people all have very critical roles in the audit process. As Dave mentioned, we were out here since probably June, working on the preliminary field work for the audit, and then we come out in August to start the final field work for the audit. And throughout that process, we're looking at not only just financial statement records, but also the financial aid program, which we're going to talk about a little bit as well. I want to take this opportunity to mention and thank management, mention that they were very cooperative throughout the process. I think that's something that's very important to mention. In an audit, to make an audit successful, the management really has to do a lot to get prepared for the audit. And not only does it stop there, it doesn't stop there, but then when we're here, we're asking lots and lots of questions, asking for more support, we're testing items. So this is really work that's happening on top of their day-to-day jobs. So I always want to make sure I recognize Dave and Andy and the rest of their team for the good work that they do. So. Okay, so tonight in the presentation, we're going to walk through the financial audit results. So there are many deliverables that we issue as a result of the audit, one of the biggest of which is the comprehensive annual financial report. The first item listed there is the audit opinion. On that and all the other deliverables that we had are considered to be clean opinions. So these are unmodified, meaning that we didn't have to qualify our assurance level related to any discrepancies, misstatements, any departures from generally accepted accounting principles. So that's good. And that's in line with where you've been in previous years as well. The opinions that are actually included in the comprehensive annual financial report are listed here. So we have our basic audit opinion that covers the overall operations of the college. We also have the reports on the audits of individual ICCB grant programs. Those are individual grants that you're receiving from ICCB, and those need to be spent for a restricted purpose. We do the compliance testing on those, and we didn't have any issues with those. That we also have a report on internal compliance over financial reporting. A report on internal control over financial reporting and compliance. That's related to the federal programs that we audit, and I mentioned financial aid. That was one of the big programs that we spent a lot of time on within that piece. And we're going to talk a little bit more about some of the specific results of these, but again, they didn't change the level of our opinion. The final one listed here is the report on the schedule of enrollment data and other bases. So we do some work and some testing on the actual credit hours that are submitted to ICCB and make sure that that matches up with the transcripts and the records that are being kept here to make sure that there's no differences. Yeah?
So that report that I mentioned earlier, the compliance report, you cross-reference those types of documents?
Is it the recognition report you mentioned? Yes, we do. Every time the college receives a new recognition report, which I forget how many years it is, we do incorporate that into our audit work papers. Yeah.
Great, thank you.
Mm-hmm. The last bullet here indicates that we also perform a separate audit on the College of Lake County Foundation. So we work separately with the foundation executive director and accounting staff on that audit. We issue a separate report on that, as well as those numbers then carry into your report because they're considered to be a component unit. within the financial statements of the College of Lake County, given the relationship between the two entities. So there's accounting criteria that dictate whether those are included in your financial statements. So you'll see in your CAFR that those numbers are included. We have a slide later on that, talking a little bit more about what we do for the foundation. Okay, so now to the numbers. We've got some highlights here similar to what we've highlighted in previous years, and you'll also hear a little bit more detail on this from the finance team after we're done here. But basically, this is the financial highlights for the education and the O&M funds within your financial statements. So the beginning fund balance you can see is about $30 million for both years at the beginning. 2015 revenues were $99.8 million, with total expenditures at $86.5 million, and that leaves you with an operating income of $13.3 million. Then there was transfers out of those two funds into other funds that you maintain within your financial statements of just under $13 million. A majority of that was transferred into the for cost for the master plan, into the O&M restricted fund. So your ending fund balance is $30.7 million this year compared to $30.3 million last year. So overall very similar, but you can see the fluctuations between revenues and expenditures there, and the difference in the transfers between the 2 years. Okay. Just a couple of things to put all of that maybe in perspective. For the education and O&M funds, we do some calculations to compare the months of expenditures and transfers that are within your fund balance. This is a calculation that kind of gives you a guideline of if revenues were to stop completely, how many months of your budget would you be able to live on with your fund balance where it's at. And so that would be just under 4 months based on this calculation. So that's fairly standard with what we see. We see a wide range of this across your peers, but basically it was flat at 3.7 for both years based on the results. The next calculation talks about the fund balance as a percentage of expenditures and transfers. This is kind of like the opposite calculation. So 31% of your fund balance is that's what it makes up of your total expenditures and transfers for those two funds. And then the last one is really just the net change in your fund balance as a percentage of the fund balance itself. So you can see there was a slight fluctuation there, but a very small percentage. Okay. We also want to highlight the auxiliary fund. This is another fund that's kept within the financial statements. Again, we opine on the district, the college as a whole, with all the funds put together, but these are just some of the individual funds that we wanted to make sure we highlighted here. So beginning fund balance for 2015 was $325,000. Your total revenues and expenditures, both down from the previous year, resulting in an operating income this year of $517,000. And that compares to a slight loss last year of $123,000. So transfers out this year amounted to $479,000, leaving you with an ending balance of $363,000. Okay. Then the next slide talks about your net position. So this is now we've kind of talked about the fund level. If we come back and think about the college as a whole and all the funds that are made up in the financial statements, we have various components of what this is basically your equity that you're reporting, your assets minus your liabilities. So the different net position is broken out by different categories based on the accounting principles. So you can see of the $180 million of total net position for the 2015, $95.1 million of that is your net investment in capital assets. That number represents all your assets that you've capitalized, so your buildings, your infrastructure, all those capitalizable type assets, less any debt that was used to finance those assets. That's why it's a net number. So all of your capital assets and debt are in that figure. Your restricted for specific purposes is $14.7 million, and that's compared to $9.7 million last year. That essentially is right in line with the restricted cash account that you have for the master plan right now. So those are the restricted bond proceeds that are issued, that are being maintained in a separate account that can only be used for the capital. So you can't use those for other purposes outside of that. And then that leaves you with the remainder of just under $80 million for your unrestricted net position. And that compares with last year of $72 million. Okay. And then there's a little piece at the bottom that talks a little bit about something that Matt's going to expand a little bit more on when he gets to that slide. But this year there was a new accounting pronouncement that was required to be adopted. It relates to the pensions. I know there's been a lot of talk about pensions lately, and GASB is trying to increase the transparency of what your true pension liability really is. So the impact on the college this year with all of the numbers involved was actually just a very small amount related to some deferred outflows of resources that were restated in your net position for this year and recorded on the financial statements. And all that is the contributions that the college made after the measurement date of the liability. And we don't need to probably get into too much of the technical details of how that's calculated, but that these figures are confirmed with the State University Retirement System, SURS, who sends out that information and provides you with what your share of these types of costs are. So again, small numbers, but it is something that if you were to look at last year's report and this year's report, you might wonder why that's there this year and it wasn't there last year. Okay. All right, I'm going to let Matt take over from here and talk a little bit about some of the required communications as part of the audit process.
Thanks. As Tara mentioned, we're just going to cover a few slides here on some other required communications that, as part of the audit process, we are required to communicate to the governing body. We do issue a draft of a formal letter that I believe is included in your board packet, and that'll be finalized as well, along with the financial statements and the other audit reports Tara mentioned previously. First, we are required to communicate if we had any significant issues arise during the audit, any difficulties performing audit procedures, any disagreements with management. And we're happy to report we did not have any of those. I think as Tara mentioned earlier, the college's staff, both Dave and Andy's staff in the finance department, as well as the grants department, financial aid, IT, and several other departments that we work with throughout the audit process. Everybody across the board was very helpful in helping get through the audit process and really realizing the importance of the audit and the transparency it provides to the college. As Tara mentioned, we do have one significant change to the accounting standards to communicate this year, and that is the change required to the pension fund accounting. That statement was GASB 68, and that's being implemented for the college as well as any of your other peer community colleges throughout the state, as well as other governmental entities too. So we're working with a lot of villages, municipalities, school districts. Everybody's required to implement this standard during the year, and it's having a significant impact really across the board in the financial statements of these entities. For the College of Lake County and any state university system, we're not picking up the liability associated with that liability. The college is in what's known as a special funding situation where the state is under the statute required to provide that funding, and as a result 100% of that liability is on the state's books. The standard has significantly expanded the financial statement disclosures and supporting schedules that are available in your annual financial report, so you will see some significant changes in the disclosures. The one thing I guess to highlight is that's the current situation now. Obviously any change to legislation or state law that would be passed either as part of the budget process or outside the budget process could have a significant impact on the liability of a report and how that funding would be provided in the future. So I know that's a hot topic across the community college landscape as well as most municipalities and governments in the state of Illinois. So again, currently there is no liability associated with this on the college books, but that is the current situation that could change depending on state law.
Just one thing, in the footnotes for this year, you will see in those expanded footnotes that Matt talked about, we do disclose in there what your share of the liability is had you been required to record it. So we do disclose the amount in there. It's just that right now it's not required to go onto your financial statements, so that's what Matt was referring to.
300 million.
Yeah,
Plus.
340 something.
Oh,
340
It's
million.
almost,
$1 million of the, when you hear the
340.
that whatever the number is, 35 billion, 100 billion, 340 million of it is just from the College of Lake County.
Yeah, but that's if pensions are funded at 100%.
100% local.
Yeah.
Right.
And they had to be funded today.
Yeah.
Right.
Is anybody higher than us besides the city of Chicago? Or no, Chicago's not even in it, are they?
No.
Yeah,
City
well, City
Colleges.
Colleges is part of it, yes.